Hi everyone, this is Ted Bauman here with your weekly Bauman Daily video. It's been an interesting week in the markets. It started out negative. Things have been drifting along a little bit more on the positive side, but we've seen a significant turnaround in the kinds of companies that are being rewarded. I'm seeing a lot of shift into smaller cap stocks. The Russell 2000 has actually outperformed most of the other indexes this week. And I'm also seeing a shift back into companies that have, in a sense, longer term time horizons that are less exposed directly to the coronavirus pandemic. Now, on that score, I want to do something that I do periodically with these videos, which is to talk about my own personal experiences in relation to what's happening in the economy as a whole. If you look at my back catalog, if you like, you'll see that there was a series I did earlier this year called Bauman Unhinged. And it was actually about my take on the state of the US economy, particularly the dominance of large firms over small ones and the ways that that actually holds back our economy. And this week, I wanted to reflect on the experience that I've had with a couple of different companies during this crisis, and what that may say about where things are headed. Now, it's a little bit tangential, but I think it does expose some of the weaknesses that we will face as this crisis rolls out and becomes a longer term problem. The first one is with my internet service provider, and who also provides my telephone service here at Casa Bauman, which is also my home office where I work. Well, yesterday there was a problem with the internet service. It just simply stopped working during the early part of the day. So I contacted AT&T, and one of the things that I found is that it's practically impossible, literally practically impossible, to get a hold of an individual person to try to help with a problem. Now, companies left, right, and center are posting all over their website saying but the reason for this is because of the pandemic. Now, certainly there could be problems with call centers. There could be problems with people working remotely, whatever. But it's very difficult to see how a company like AT&T could suddenly, in the course of this situation, get into a situation where it is literally unable to respond to customer queries. Now, eventually I did get this resolved, but it took a long time. And it involved going through a number of steps that revealed that AT&T's website and its specific sort of arrangements for trying to help customers through these things is actually quite badly broken and has a lot of programming errors, a lot of blind alleys that it can lead you down and put you into, it'll say it's going to do one thing and then it does something else, or it doesn't solve your problem. All of which is very frustrating for a person. Now, of course, everybody knows that the telecommunications sector, and certainly our cable providers and our internet providers, have this reputation. My point is that it seems to me that a big company like AT&T is actually, in a sense, kind of using this crisis as an excuse to cut back on its expenditures in order to try to maintain its cash flow. Now, that's not necessarily a bad thing for a company to try to do. But what concerns me, and what really relates to the big picture in the stock market, is what that's going to do to customers and their shopping behavior in the long term. And in that score, I want to share a second example, one which is a lot more difficult than that one. And it is with the company Home Depot. Now, Home Depot, as you know, is a part of a duopoly in the United States of large do-it-yourself home improvement stores, the other one being Lowe's. Now, Home Depot has been a relatively successful company over the years. Its stock price has grown. But one of the things that I've noticed with this crisis is that it's gone even further than AT&T in terms of its lack of response to customer queries. And here's my story. I ordered some patio pavers about maybe more than a month ago now. They were supposed to be delivered initially on March 15th, then that was delayed to March 27th. That came and went. I finally contacted the shipping company and they said, well, we actually can't deliver them to your home because we don't have the right kind of truck. We've been trying to call Home Depot for the last 10 days, and they're not answering their phones and they're not answering their emails. I too was trying to contact Home Depot about this order, for which I'd already been charged, by the way, with no success at all. I was not able to get through on the phone, endless wait times, eventually giving up in one case after more than an hour. No emails, no response to emails. In fact, I noticed that on the most recent email that I sent in, it said that their customer care line, their email line, is no longer being actively monitored. Similarly with their website, they talk about having a live chat opportunity that you can find somebody to help you. It turns out that service has actually been suspended, and that web link to that part of their website is now dead. Now, I raise all this not because it's unique to me, or that it's something that it's not the first time that these kind of things have happened. But I've done a little bit of research, and there is an absolute, total explosion of anger and negativity towards this particular company and others, particularly on their Facebook page, on their Twitter feeds, and so on. And the experiences across the board are exactly the same. What's happening is that people are realizing that large companies like Home Depot and AT&T are in a position where literally they can ignore their own customers. Now, why can they do that? They can do that because they have quasi-monopoly power. They are so large and so entrenched, and they have so much market share that they literally can take customers for granted. Now, here's why I raise this. I predict that one of the things that's going to happen out of this crisis is that we are going to see a lot of companies being exposed for this kind of behavior. They're using the virus crisis as an opportunity to cut back on cost, and the first place they're doing it is in terms of customer service. They make a lot of noises about how they care. They make a lot of noises about how they want things to be safe for everyone, but they don't seem to be doing much in practice. In fact, in my local Home Depot, same as my Lowe's, I see very little evidence that their employees or anybody else in the stores are actually doing much to try to reduce the potential for transmission of the virus. Now, again, this is kind of a personal peeve of mine, but I do think that it relates to what we may see come in the future in the United States economy. I predict that we are going to see a backlash against these large companies, particularly because of their behavior during this crisis. And I predict that specifically some of the large brick and mortar companies that have managed to survive through the crisis simply by being deemed essential are going to find out that on the other side of this crisis, they are going to be punished by investors who realize that customers are going to be looking for alternatives. They're going to be looking for other ways to buy the things that they get from these companies, and they're going to be complaining, I think, to those companies. The companies may respond, but in all likelihood, given the fact that over the last 2 decades, they've been able to make extra profits by being monopolists, by really having very little competition, they will probably resist doing that tooth and nail. Now, how does that relate to the big topic, which everybody's been talking about, is will we see a second bottom in the stock market? Well, I still believe that we do, and I think it's still going to be based on the impact of employment numbers and GDP numbers. Remember, we've only seen Q1 so far as GDP is concerned, and that only covers a little bit of the crisis period. It doesn't cover Q2, which is only going to come out in July. Now, I predict that once we get the April, May, June figures, then we are going to see that double dip because people are going to realize just how bad this is. Now, a company like Home Depot or AT&T, as far as I know, has not suspended their dividend payments so far. But given the fact that they are clearly, evidently using the virus as an excuse to modulate their cash flows, to try to basically cut back on their customer service in order, using the virus as an excuse, I predict that at some point there's going to be a backlash. And that combined with the really dire economic data that we're going to see in July, I believe is going to lead to a second downturn. Now, I'm not going to wade into the debate about whether or not we're going to see a rebound of the virus as a result of the lifting of economic restrictions, but that could also play a role. But my main concern is simply that it's not feasible for companies to be reporting these kinds of serious downturns in revenues and earnings and still maintain high stock prices. So going forward, I believe that the best thing to do for you as an investor is to be very judicious about where you put your money. And right now, my big call is to focus on companies with strong, secure dividends. There are plenty of them out there, particularly in the real estate investment trust sector. And one of the great things about that sector is that although there are many companies that are scaring investors right now, like mortgage REITs, retail REITs, mall REITs, etc., that are suffering because of the crisis, there are others that fly under the radar screen. And because investors see the word REIT and panic, they're missing out on those. There are some great opportunities: cell towers, data centers. There are others. In fact, I've got one coming up in the next edition of the Bauman letter, which is coming out next week. And I've targeted a company in that report that is specifically well positioned to benefit from the situation, not by screwing customers, not by trying to cut back its level of service, but by actually presenting a service that is desperately needed by a lot of people in this circumstance, not medical. It is related to something that everybody faces in a time of disruption and transition, specifically what's happening to a lot of small business owners. That's the kind of logic I use when I make picks. But let's go back to the original point that I was making. I believe that corporate America, particularly the large companies that profit by being large, by being able to charge excessive prices and deliver inadequate service because they have lack of competition, are going to get a bit of a comeuppance during this crisis. I believe that, like other institutions in government, outside of government, that have been exposed for their weaknesses by this crisis, we will also see that in terms of some large companies. So I'd be very cautious about investing in some of these companies that are clearly, in a sense, trying to leverage the crisis by reducing their services to their customers. They may not be doing it consciously, but the reality is that that is how customers are perceiving it. Trust me, if you don't believe me, go onto Facebook. Look at the pages for some of these companies. Look at what people are saying about how they are behaving during this crisis, and you'll see what I mean. So my message for you today is, number one, steer clear of companies that are going to develop a bad reputation from this situation. Number two, look into opportunities that are clearly there, even with this critical situation. Look for them in the unexpected places. Look at the dividend payers, the companies that are cheap right now because they are being tarred with the same brush as other companies in their sector, but which actually have great growth prospects. You can lock in double-digit yields within a couple of years just by seeing those dividends grow against your cost basis if you buy them now. And the third thing is, we are going to see a return to negative stock market returns, I believe, over the course of the summer. It may take a while, and I may be surprised, I may be wrong, but I believe that there is still an opportunity to buy companies at low prices. Just make sure you buy the right ones, and that, I believe, at this point does not include the companies that are letting their customers down. This is Ted Bauman. Remember, subscribe to the Bauman Letter if you have not done so already. Also, subscribe to this YouTube channel by clicking the button below if you like what you see. The Bauman Letter is chock full of ideas for investment, and this summer we are focusing on investments along the lines that I just described. Safe, dividend-yielding companies that are going to beat the market, that allow you to buy them at low cost right now to guarantee higher yields on cost as time goes by. So that's me for this week. Look out for the next video on Monday, Your Money Matters, with Clint Lee, having our weekly discussion on the state of the markets and what's going on. I'll talk to you again next Friday. Have a great weekend.